Hey, welcome to The Explainer. So, if you've been keeping an eye on the AI market, you know it's been an absolute roller coaster. Today, we're going to break down exactly how you can navigate all this volatility.
Right? It feels like AI is crashing, then it's pumping, then it's crashing all over again. But what if I told you there's actually a pattern hiding in all of that chaos? Let's dig in and find it.
All right, first up, the AI market whiplash. If you've been watching your portfolio lately, you know exactly what I'm talking about. It has been a wild ride.
So, for the better part of the last month, things have just felt harsh, you know? The whole sentiment was down, the charts were all pointing in the wrong direction, and it really felt like we were just settling in for a long, painful dip across the entire AI sector. But then, bam! Nvidia just completely flips the script. Their earnings report wasn't just good, it was a blockbuster. It sent the stock soaring almost 8%. And because Nvidia is such a massive leader in this space, it was like a rising tide that lifted pretty much every other major AI stock right along with it.
So, let's just recap this insane sequence of events, because it happened fast. We had a multi-week downtrend that set a really negative tone. Then, out of nowhere, yesterday, we get this massive pop from Nvidia that creates this huge wave of optimism. But by Thursday morning, just when everyone was starting to think, okay, maybe we're back, the floor just fell out from under us.
Boom! Just like that. In the span of a single hour, that entire rally, gone, vanished. We were right back where we started, deep in the dip. It's just a crazy reminder of how fragile things are right now, where all that hope can just evaporate in an instant.
And that right there brings us to the million-dollar question. When the market is this unpredictable, giving you all this hope one minute and then snatching it away the next, what are you supposed to do? How do you navigate this chaos without losing your mind or your shirt?
Well, there's actually a really useful way to think about this. It comes from an investor named Karthic, and he developed a theory that's all about one thing: patience. It's about learning to tune out all that short-term noise and focus on what really matters. So what is this Karthic's theory? Well, at its core, it's a philosophy that says you should focus on owning a piece of a good business, not just trading a stock symbol on a screen. It's about ignoring the daily roller coaster and putting your trust in the actual value of the company you've invested in. And the first big idea is simple. Remember that tough weather doesn't last. Think of all this crazy volatility, the downtrends, the fake rallies. They're like financial storms. Yeah, they feel intense and overwhelming when you're in them, but they don't fundamentally change the long-term forecast for a truly great company.
And this slide just lays it out perfectly. It shows the two completely different games you can be playing. On one side, you've got short-term trading and options, strategies that are just incredibly difficult when the market is this choppy. This kind of chaos can totally wipe you out. But on the other side, you have the mindset of actually owning a solid business, which, you'll see, plays by a whole different set of rules.
And that's the heart of it, right there. Owning a good business rarely fails. See, the daily stock price is just noise. It's the market's mood of the day. The business is the engine underneath all that, the real fundamentals, the product, its position in the market. The trick is learning to separate that engine from all the noise that's happening around it. Okay, so theory is great, but how do we turn this into something we can actually use? Let's break down the 4 key steps to putting this whole philosophy into practice. This is your playbook. So here it is, 4 simple steps. Number 1, when you see these dips, don't panic. Seriously, if your belief in the company hasn't changed, a dip can actually be an opportunity. 2, buy within your strategy. Don't just chase whatever's hot. 3, and this is probably the most important part, you have to do the homework to pick great companies. And finally, number 4, stay loyal to them. You have to give them time to do their thing. But, and this is a huge but, the whole strategy hinges on one thing: your ability to pick the right companies. A business won't fail unless you pick the wrong one. This means you really have to dig in and understand what makes a great AI business. Things like their tech, their partnerships, or a clear path to actually making money. The conviction has to come before the chaos starts.
So what's the ultimate takeaway here? It's really this: survive the volatility by truly loving the businesses you own. Because in a market like this, the next big wave of success, well, it always belongs to the patient.